Good morning, guys, and it is a good morning. It is Sunday, February the 4th, 2024, and in this video, what I'm going to do, and I think that this video is more for people who have been day trading quite a bit already. You might empathize or you might sort of understand what I'm doing here. I'm going to take price segments sort of at random and tell you more or less what my thoughts and emotions would be looking at that price action. Now, a little bit of background about me. I'm an amateur hobbyist day trader. Okay, guys, I don't make my living day trading. But I do watch pretty much every day. I watch the micro ES, and I'm very habituated to it now. This is all I trade. I firmly recommend that for your psychology and for your improvement as a trader over time, you need to focus on one market because you're just going to become familiar with price action. No matter what system or models that you're using, you have to habituate yourself to it. So I don't recommend trading more than one market. If you need to pick a market, stick with that. So I do the MAS. All right, so let's first start with the obvious, which is where we are right now. When I look at this price chart right here, I have very little, like where price is right now. I would have a very difficult time taking a position long or short at random right now. And I think that the reason for that is that visually looking, I don't like to take trades when we're in a prior leg, so I can visually see a prior trend here. We're on the 10-minute chart, guys, but it doesn't matter what time frame you're looking at. I am the kind of trader where I see the market in the opposite direction, and so I don't like to, even though this is not always, it doesn't always work this way, guys, but I prefer when price is going up to take shorts and when price is going down to take longs. Okay, I more easily see reversals than I do continuations. That's just my cognitive bias. So when we have a market that's sitting sort of right now in the middle of a prior range, I would not execute a trade, or I would not feel very confident knowing in which direction the market is about to travel. And then the second thing that I'm always looking for, guys, is I'm always looking at the time on the bottom of the screen. And so obviously the market is closed for the weekend, and so I really have no idea where they're going to reprice the market on Sunday. But typically, what I will tell you, having again, this comes from watching price action weeks and weeks and weeks and months on end. But typically, the market will usually open right around where it closed. Although every once in a while, you'll see a pretty substantial reprice, what's called a new week opening gap, or a resettlement price that is substantially higher or lower than Friday's closing price. But usually it's just right there, right? Not much gap at all. And so, for example, what I would sort of expect this market to do would be to do something like open right here, trade down a little bit, and then start trading higher. That is more or less what I would expect this market to do. But I would not feel comfortable just looking at this price segment. My discretion would not tell me to execute a trade just on this price action. Again, because I don't like the fact that we're sitting in the middle of a prior leg. Okay, let me take some more price action at random and give you my thoughts. So let's say that we were somewhere around here. All right, so I'm going to use the brush tool and tell you at different points where I would be in this box. So let's say that I was at point here at this box. I could see that these highs here are equal highs, meaning they're flat. And I am very biased to believe, and I'm predisposed to believe, that the market likes to run through these flat highs. So I would not initiate a new long right at that point X where I marked. But I would expect the market to continue to run higher, and then I would feel much more comfortable taking a short position. Okay. And guys, just so you know, I do take losses. I win about 70% of my trades. So More often than not, I am correct. But it goes without saying that, like many day traders, I take losses. But anyways, right at that point X, would I initiate a new trade? No, I wouldn't, because I'm not a breakout trader. I just want to trade in the opposite direction of where price has been recently traveling. So I would not feel comfortable taking along there at point X. All right, let's try point X here. What would I be feeling? Well, the market's been really strong recently. Considering this is 11:50 in the day, I would see us coming into the lunch session. Generally speaking, guys, I like to see second and third touches, so I don't necessarily just want to get short right on point X there. I don't think it would be the worst short in the world, and I would expect that the market would come back, and that would end up being a profitable trade. But kind of knowing my better instincts, the ES usually likes to test things at least 2 times. Doesn't always, but it likes to test things 2 to 3 times, sometimes more. And so oftentimes, guys, that first very sign of reversal, it just isn't right. It's just not right. The first sign of reversal is not right. Now the second leg higher, let's get to point X. Could I have taken a short here? In theory, if I were watching this 10-minute candle form live, I would be comfortable taking a short there because it's a second test above prior highs here and then this prior high here, right? So the market already had an attempted move lower, and now we're on a second move lower, and I like taking what's called second touch trades. I feel much more comfortable taking second touch trades than I do first touch trades. But that being said, this candle here, although it was a big candle, right? So you can see that this 10-minute candle was, guys, from top to bottom, that was a 25-point move. And so obviously that'd be $125 on a single micro contract. So that's a real trade there. But seeing that candle and imagining it in your head prior to it happening, you could, considering that the market, also looking that we're running up around 5,000. And oftentimes what I will tell you is that when the market comes up on a big figure, so let's say 5,000, right? 5,000 obviously being a huge figure on the ES, but let's say it was like 4,500, 4,000, right? Some real big round number like the 500s. The market does not usually just like to plow through that on the first attempt. It does not like to plow through significant numbers on the first attempt. Usually what it will do is it will come dance around that big figure, and then eventually it will go through it, but it will usually dance around. And sometimes it actually will just get really close, but not go through that big figure. So it's really, I don't want to say that you can base a strategy off of this, but I have found through my habituated experience that if you see a big number, don't expect the market to just plow through that big round number on the first attempt. It probably won't. And then obviously, guys, taking the time of the day into factor, we're sort of, after the market's already moved up a lot, this would have been over 1%. The S&P 500 does not like to move more than about 1.5%. Really big days, 2%. I have seen 5% days. We had them more often in the past when the index number was smaller. But then again, guys, as we come into 2024, I'm actually expecting market conditions to change, and I'm expecting big days, really big days, a lot of volatility. So, but as of late, guys, anything above like 1% is a really big day. And so once it's kind of already after 1%, you know what I'm saying? It's after 1%, then it's questionable how much further it wants to go than that. Okay, so with all that being said, I would have definitely, I remember seeing this and I was flat. I wasn't on this. I would have had this short all day long. Like somewhere up here, if I were around this candle, not this candle, that candle would not be, I wouldn't feel great about shorting that candle. But this candle or the spinning top candle here, if I would have seen that price action, depending on how those candles formed live, yeah, I definitely would have been short on that because first off, It's already tried to go down once, tried to go down twice. Now we're extending for a third time. We're getting right up to a really big number, and markets, it doesn't like to go through really big numbers on the first time. So I would have definitely felt comfortable shorting there. I know that for a fact. All right, let me take this slice of price action and just take any sort of point here. All right, let's start at the beginning. Let's say that we're somewhere down here. All right, so this would have been a difficult long for me on this X. I mean, maybe. It depends, right? So we're at 1010. And guys, I will tell you that from my experience, the AM session usually likes to form its higher low somewhere between like 10:30 and 11, more often than not, like 55% of the time, if I had to guess. That sort of 10:30 to 11, 10:30, 10:40, I'm really expecting the market to oftentimes reach some sort of a zenith or a turning point, a pivot point, in other words. So that's sort of my experience with that. That's a lot of confirmation bias talking, but it's nevertheless, that has been my experience. This market, on Friday, acted differently than what I like. So if you want to know in which market conditions do I, Reese, trade the best, it's something like this. Those are my market conditions by far, guys. I have a really tough time. People, traditionally they think that the market looks like that. So usually people trade well with that market condition. I'm just going to tell you that's not my market condition. I am just a trading algorithm. I want it to just do that. I wouldn't care if the market went up at all, ever. I don't like trends. I like up and down, up and down, up and down. That's it. That's how I see the market. So this would have been a difficult long for me. I wouldn't have shorted it, guys. I'll tell you that. I would not have shorted this expecting after that big price leg there, but I don't know if I would have longed it. All right, let's take another point on the yellow box here, and I'll just give you my thoughts I would have sort of live. Okay, so at that X, would I be willing to go long? Well, I like ICT's models, and I don't care how many people say they don't work. Maybe statistically speaking they do or they don't, but I will tell you that they're sort of how I visualize the market, and I would have seen that. And so as the market was showing a lot of strength right there at about that second X, I could at least get a trade in. I would have felt comfortable. This is not to say that I would have taken this. Well, no, I would have taken this trade. Like, I would have felt comfortable here for about a 10-point trade. Okay, realistically, guys, I have a hard time seeing the market going a lot higher than a prior high or going much further below a prior low. I have a hard time visualizing that before it happens, even though I know logically, of course, it can do that. So anyways, with that being said, I've been trying to work on that, but could I have gone long on that X and gotten the direction correct? Yes, at this point in my trading, I would tell you that although that's not the world's most comfortable setup, like over here, guys, I would have been on that all day. But here, that would have been more difficult. But I could have done it at this point. All right. Let's check out this segment of price action and see at a couple different points what I would think. So, what time of the day was this? This is in the overnight session. Yeah, this would have been, honestly, when I wouldn't have even looked at the chart. But could I have told you that the market was probably on a Thursday in the overnight session? All things considered, if I knew that this was non-farm payrolls coming up on Friday, yeah, I could have told you that the market was probably just going to barcode many hours before Friday's volatility. If I had a bigger account size and I was able to throw around more contracts, I definitely could have seen myself just trading this up and down, up and down. That's sort of how I view the market anyways to begin with. But as we get closer to that non-farm payrolls, that's when the market, obviously, I would have expected at some point the ultimate increase in volatility, which is what we got. So During this segment of price action in the yellow box, I think I probably wouldn't have even been looking at the chart. But frankly, all things considered, from my experience now, you know, taking information like high impact news events, I could have predicted basically that price action happening. All right. Couple more price, just random points in price and what I would be thinking more or less as they happen. I think this is good for beginners if you're not familiar with day trading. Like, how does a day trader actually think in his head while he's watching the chart? What is actually going on in his mind? And more or less, it's something like this. All right, let's just take a point like right here. At this point, you know, if it's 1600, the market is closed, I would have been like, damn, was there earnings today? There probably was earnings today, wasn't there? I would not be in the market at this point, even though, you know, this would have been a great trade over 30 points in about 50 minutes, and it's just as viable as any mean reversion trade. I wouldn't have been in the market. This would scare me a lot. It's happening at a time that I'm not super familiar with. It's happening after the closing bell, which really, guys, the market only moves like this after the closing bell when there's earnings or maybe an economic release or just a sudden news driver. You don't expect the market on average to perform that way after the closing bell. Okay, it does happen, but it's usually on earnings or some other news event. And then I don't like when the market is just going in one direction. A lot of people would disagree with me and they say, oh, Reese, I'm very comfortable when the market is moving in one direction. I don't like this. I like this. This is my market. This is where I'm killing it all day, every day, just up and down, up and down. This sort of thing here is very difficult for me, which is unfortunate because that's sort of been our recent market conditions. So anyways, no, I would have been in sort of astonishment with how much the market had gone up, and then I'd be wanting to short the market. After seeing this move, I'd feel like it was unsubstantiated, and more or less, guys, I think that, you know, I wouldn't expect the market to move like this after the closing bell, even though obviously it can do that. And then I would be much more inclined to take some of these shorts up here, like that candle right there, paired with the fact that it's on this rejection block, and that move is all, I mean, we're already so extended. I definitely could have seen myself holding on to this short for at least a few points. Okay, so let's talk about some of my most difficult sort of price action, which I know is this. This is really tough price action, right? This, for me, and here's why. Again, my preferred market is something like that. So this sort of grind higher, which is what we had here, where the market is giving you consistent sort of half-ass signals that it wants to reverse, but it's not reversing, very difficult for me. Very difficult. Like, why? It looks like it wants to reverse, but it's not reversing. Which, you know, it's just one of my flaws that I have in my way of thinking. Like, you know, it's trying to reverse here, it's trying to reverse here, it's trying to reverse here, it's not reversing, it's just moving in the same direction. Oh my God, how can it be just move? Like, it's, I mean, look at it, it's just designed to murder me. I mean, look at that, right? It's trying to reverse like 5 times and it ends up rocketing 62 points higher. Like, God, man, that's not fun. That's tough price action. But with that being said, as I have become more habituated to this sort of market condition where we're just going higher and higher and higher, you know, could I have gone long here? Yeah, I could have seen a long there. I potentially, maybe, possibly could have seen the long there as well. But definitely that first X where the market, all right, it's trying to go down for a second time. It's going to try and go down for a third time, and it's staying above. This is an ICT fair value gap here. And given the fact that the market has been so strong recently, could I have gotten that long there? Recently, with my greater experience day trading, yeah, I probably could have gotten that one. But very frustrating price action for me anyways. All right. Couple more. Now here is a very interesting piece of price action that I would have been. I'll tell you where my bread and butter would be is just these three candles right here, and the fact that that's at 11:10 in the day, and you can see I love it when the market just dips below these little long wick candles, and it just dips below that, and you get that beautiful sort of three candle reversal pattern, and the fact that like, hey, there's probably liquidity under here. Market dips below that, and then that candle right there, I would have been on that all day. I mean, that's primo right there. That's primo price action. And I'll be honest with you guys, at this point in my career, I would have just been aiming right there. But as I become, I would say, a more experienced day trader, could I at least have held on one contract and seen if it would have gone up here? I think I'm getting to the point where I could have let that happen, but I know I would have at least had it to the first high. So yeah, I mean, could I have seen that one right there? That one is just cremo. That's beautiful. That's a beautiful reversal right there. I definitely could have seen that one. And they're not always as beautiful as that reversal there. Okay, another piece of price action, and let me talk about it. So this yellow box would have been okay for me, especially if I'm in, so like right about here. The difficulty with this yellow box is that we were already so extended down. Now, what sort of time of the day was this? This was after the futures market was closed. This was in the overnight session, so I wouldn't be expecting the market to move after FOMC Wednesday, which is what this crazy stuff over here was. I wouldn't expect the market to move that much after the closing bell on Wednesday, although it moved over 10 points, so not a terrible move. Could I have taken that short on that X there? Yes, but I probably wouldn't be trading at that time of the day anyways. All right, let's talk about FOMC, and realistically, could I have gotten a lot of this? I've been through more and more FOMCs as I've day traded longer and longer. I'm coming up on about a year of dedicated day trading as a hobbyist and watching this particular market day in and day out. I'm about 9 months straight, and I've seen a few FOMCs now, and they do typically behave like this, just wild gyrations in both directions. ICT talks about that, and I found that to be more often than not the case. So I'm not saying that you should trade through FOMC, but what I'm saying is that as you watch more and more of them happen, you just get a little bit more comfortable with it, and you expect the market to sort of the volatility expands a lot, and you expect that. So I actually was trading this, and I ended up coming out, I think, with a profit during this price action. This price action, believe it or not, it just kind of works for me. The smaller fluctuations I might not have seen, but I actually remember specifically being in on that one. And that's when Jerome Powell started, I don't know, yammering something about potentially cutting interest rates, and then he started just downing on everybody's parade. I could have seen that long, and then that short right there. Why do I think that's so beautiful? Well, you're knocking out a bunch of prior highs, and you're just, when you see that sort of long wick like that, and it's coming up into a prior long wick like that over there, and it's during a time like FOMC that you're already expecting the market to be wildly running in both directions, that would have been a great time to just throw up a limit order up there, one contract, really small. I could have been on top of that. I think I actually was on top of that. I was either on the long side or the short side, but that actually, believe it or not, I love that price action. Now let's talk about this, right? Let's talk about this price action where we just have a really acute move down. As you become more experienced in day trading, you get used to seeing what you do not expect. And I'll be honest with you, you don't expect that yellow box very often. However, if it's FOMC, if there's a major news impact event, Jerome Powell is speaking, you do expect that to happen. It could have, I'll be honest to God with you, I mean, you could have seen that yellow box, but just upwards. Right, Jerome Powell was speaking at that time. You had to know that. You can't just go back in this price action and not know the context of what was happening at that time. That's Jerome Powell was speaking, and he was talking about how they do not expect to cut rates during the March cycle, which is our up-and-coming cycle. And the market did not like that. And so as a day trader, and I'm watching the same index day in and day out, watching the news calendar on the right, this doesn't shock me given the context. Would I have been able to take this short all the way from the top to the bottom? No. I mean, I'll be honest with you, I would have gotten out somewhere around here if I took that short. But I could definitely see myself taking that short on that X, but I wouldn't have held it for much further than this low here. All right, so let's talk about when the market's doing nothing. I wouldn't even be trading the yellow box. If you blow it up, you do see like there are some patterns here. I like that X, where the X is. I think I could have taken the long there. But when the market is really constricted in its volatility, it gets very difficult to intuitively think about what the market is going to do because it's not doing anything. And let's see, this was the overnight session. I think I could have caught this one. Why? Because it was in that fair value gap here over to the left, and it wasn't getting above that green candle there. And especially on this candle here, if I were awake during that time and I saw that, I think I could have gotten in on that short. That was a pretty nice two-bar looking reversal. So I would have been fairly comfortable taking that short and then aiming at this liquidity down here. So this move here makes sense to me. A lot of the yellow box, I just wouldn't even be trading, to be honest with you. All right, let's talk about sort of this period of price action. I'll tell you where I would be frustrated, and then I'll stop with the video. What would frustrate me as a somewhat decently seasoned day trader? Attempt number 1 to go down, attempt number 2 to go down. This thing really obviously looks like it wants to go down, but it's just a lot of retracement against it, right? A sort of high resistance move. I think that I would have been a little bit, I would have been more or less on the right side. I could definitely see that the market was wanting to run on this low and on this low. And I would say also down at this fair value gap here. Could I have seen that? Yeah, I could have seen that. But it would have been difficult. This move, I'll tell you where I honestly think that the move makes the most sense to me. If I see the market come down quite a few points like it did here, and then the market makes another attempt lower, but it doesn't want to make a new low, right? Second touch here. This candle, or while this candle was forming, I would be willing to bet the market's going to come up on this high or this high, and maybe even I would have expected the market even to go run that. But somewhere right around where I have this X here, that's where my discretion would have gotten me long. Okay, I will tell you that. These sort of long candle wicks, when they're over and over and over again, that gets pretty difficult. Okay, and finally, guys, I want to mention these expansion moves. They do happen where the market is illiquid, inefficient, right? There are not enough matching orders in the marketplace, and so the market is rapidly repricing higher. This could have been on some earnings or news event. This would have been, difficult for me. I would be much more interested in waiting until I saw some sort of a topping pattern and then taking a little scalp short than I would be taking the giant trade long. Does that mathematically make sense? Probably not. But just from a reliability standpoint, I'd much rather wait for that move higher to be completed and then get that little 5 to 10 point move down than I would feeling comfortable in a trade like that. The market going straight up is a difficult condition for me. It's not how I see things. Although obviously, as you can see, it does happen. So that might be something that I need to work on. Okay, guys. What I wanted to do in this video was show you some of the actual thought processes and the visual patterns that I see, and trying to visualize, trying to show you more or less what I'm thinking while I'm trading. Of course, I am seasoned to use ICT models, whether they're statistically relevant or not. I have attuned myself to see them. But there are certain market conditions that I've pointed out to you here, like when the market is going straight up, that are difficult for me. I much prefer a consolidating market, a market that's within a trading range. That makes a lot more sense to me than the straight up, straight down. But especially straight up. I like to see straight down is fine with me, but straight up is difficult. Okay. Anyways, those are some sort of live commentary and thoughts I have on the market and what I'm thinking while I'm discretionary trading. Guys, as you can see, a lot of the thoughts that go on in my head are only there because I watch the charts on a daily basis and because I study the markets on a daily basis. You can't have relevant or statistically significant thoughts more often than not if you are not habituated, which is why, in my opinion, although I'm not a financial advisor, this is not financial advice, take everything I say with a grain of salt. Watch one market. Don't try and watch 2 markets, 3 markets. Oh my God, some of you guys have watch lists that are so long. One market. I like the MES. You could do crude oil, you could do gold, you could do the Euro USD, but I recommend you trade one market, and then you need to watch it day in and day out, and use relatively similar time frames as well. And then you need to familiarize yourself with using your platform. I also, guys, don't recommend oftentimes changing the chart layout that you're using. I sometimes will change this from a gray to a white, but that's it. I use green and black candles like ICT, and I don't use any indicators, and that's how my eyes are visually trained to see the market. And you really need to do the same. In my opinion, if you're chart trading, your chart needs to pretty much always look the same. So I don't recommend using different layouts or things like that. Use the same layout all the time, every time. Okay, guys, that has been that. Bye-bye.